All right. So I'll be talking about liquidity. Liquidity is very important in the market because it is like a fuel, just like a petrol to car, right? So liquidity is like what? A fuel to what? To market. Just like what? Petrol is to what? Is to car. You cannot drive your car without what? Without petrol, right? So markets cannot move without what? Without liquidity. So liquidity is what moves the market. So it's very crucial that you understand what liquidity is all about. Are you with me? All right. So liquidity is what is where money is sitting in the market or where there is money in the market. So, and there are different kind of liquidities you should what, take note of. We have equal top and we have what equal high. We have range liquidity and we have what trend line liquidity. All right. So see equal top. Now look at this equal top liquidity. Sorry, equal low liquidity or double bottom liquidity. Why is it so? You see, let's say for a retail traders, those who trade support and resistance, when they see market bounce from here, went up, came back and bounced again, what do you think is happening? They're expecting what? They're expecting to buy from here, right? They're expecting market to what? To come back here and what? And buy from here. And eventually, they will place their what? Their stop losses around this zone, right? Their stop losses will be below this level, right? So that's why this zone is what is a point of what liquidity. There is what liquidity sitting around the zone. So the people who trade support and resistance, when they see a double bottom like this or equal low like this, they are anticipating to buy from here and what targets the upper side, then sets their stop losses here. Also, there are those who trade what breakout. Those we call breakout traders. We call them the breakout traders, right? They have their what? They are waiting for market to break below this level because it is a support level, and then what? Set their what? Their sell limit around this zone. So likewise, their stop losses will be above the zone, meaning there is what? Liquidity sitting up around the zone too, right? So they are anticipating for what market to what to sell from here. They will set their stop losses around these levels. So that's why equal low that's why equal low is what a point of interest, just like in terms of liquidity. You have to know when you see an equal low level, be careful, don't trade directly, wait for what a sweep of liquidity because markets will not just buy immediately from here. There's what we call liquidity. Markets will do something like this. It will take all the stop losses sitting below this level, it will take it, it will sweep below it. So those who are trading breakout to think maybe it's a breakout, they'll now what? Enter the trade to sell. And what do you see market did? Market swept below and then what? Reverse back up. So market took the liquidity below this level and take the liquidity above this zone. So this is what? This equal low is what? Is a point of liquidity. Market will then eventually go fly straight to this way. Why? Because markets have what taken the enough liquidity it needed. Just like I said liquidity is what is like a petrol to car, right? Liquidity is the fuel to the market, just like what petrol is the fuel to what to motor cars, right? That's that for equal low liquidity. Now, double top or equal high liquidity, just like equal low, but just inverse of this, right? In this case, we have liquidity sitting above this level, right? We have liquidity here. So the retail traders doesn't know anything about liquidity. They just see a resistance level and they are anticipating to what? To sell from there. So those who are anticipating to sell will have their stop losses sitting here, right? They'll be waiting for market to what? To come to this level again and then to come to this level and then sell again. But market will not do that. But instead, market will what? Break above this level, take their stop losses. That's liquidity. Money, take all their orders. Then what? Those who are anticipating to what? For the market to break above this level will now jump into what? To buy. And then market will what? reverse back, taking their what? Their stop losses too. That's money or liquidity. And then what? Eventually market will begin to fly down. That's what? That's liquidity. Market trick. Liquidity is just like a trick in the market. It will trick them into what? Into taking trades. That's what we call liquidity. It's just like I'll talk more about there's what we call engineered liquidity. In case market did not get enough liquidity it needs, it will engineer that liquidity for it to what? For it to move. So when market did not get enough liquidity to what? To move it, it will engineer it. I'll talk about engineered liquidity in our subsequent classes. But for now, just take note of this kind of liquidities we have in the market, right? So the next thing is what we have what we call range liquidity. So range liquidity is just like in a ranging market, we have our resistance level and we have our what support level. We have traders who trade what support and resistance, right? So there are stop losses. Those who are anticipating market to come here to buy will have their stop losses sitting below this level. In that case, there is what liquidity here. In that and another case, those who are anticipated to sell, there is what liquidity here too, right? All right. So in a range liquidity, there are liquidity sitting above the top and there are liquidity sitting below, right? Because if market is coming here, there are those who are anticipating to what sell from this level. And what do you see? Market will not do that. Market will go above this level, take their stop losses, and then there are those who are breakout traders. As the moment market break out of this level, they'll think market is what is about to buy. And what will they do? They will what begin to buy. But then market what will now reverse and take their stop losses below this level. And what do you see happen? Market will then what bounce what to the next what level of liquidity again. Right? So market took liquidity on this side and take liquidity on both sides. So that's what range liquidity. Likewise, if those who are buying here, market will not buy immediately. Market will what? Go below this level, take this liquidity here, right? And then what? Reverse. Those who think this is a breakout, but instead it's a fake breakout, they what? They will jump into sell, right? And then what do you see market will do? Market will reverse, take their stop losses that is sitting here, and then what? Begin to what? To buy. So that's the essence of liquidity. Liquidity is what? Is to trick traders. The smart guys, the smart money guys set these traps for traders, for retail traders, just to what? To make their position, to get their entry into the market very cheap. If they are to enter immediately into the market, they will pay expensive fines because they are playing with big, big money. They are playing with millions of dollars, billions of dollars. So if they are to enter the market with all that amount of money, they are paying huge fines, huge fees. Are you getting it? So they came about this concept of liquidity to trick traders into what? Jumping into trades without confirmation. So they do this on purpose just to what? To get their to take these positions, these guy positions at a cheaper rate. Because the moment you are buying from here, right, and I take your stop loss, it means you are selling to me at a very cheaper rate, right? Let's say you have your entry here, $100, and then you were buying from here, and then eventually I hit your stop loss. It means you are selling to me at a very cheaper rate, let's say $1, for example, right? Are you getting it? So these guys, these smart money guys, came about liquidity because they cannot just dump their money straight or directly into the market. If they are to do that, they will pay huge fines and huge or expensive fees because they have big capital to play with. So they don't do that. They use liquidity and they use retail traders who do not know anything about liquidity and they use them. Are you getting it? So now, you have the ideas, the SMC trader now, you always, if you see these kind of things, these kind of levels in the market, wait for what? Sweep of liquidity before you look for your entry. Are you getting it? So the next thing is what? Trendline liquidity. There are those who trade trend line. We call them the trend line traders. Are you getting it? We call them the trend line traders. Now, liquidity is sitting around this level, right? There is liquidity here. This trend line, there is what liquidity. There are those who trade trend line. They are anticipating for market to what? To come to this level and then what? Begin to fall again. So those who are what? Trading as anticipating a sell will have their stop losses sitting here, right? And there are those who are anticipating for market to what? To break out. We call them the breakout traders. What are they looking for? They are looking for market to what? To break out, right? Then reverse and then what? Do something like this, right? That's why I don't trade trend lines. The reason why is there is no logic behind it, but it is more of like a liquidity trap. Are you getting it? So those who are breakout traders are anticipating for market to break out and then they want to retrace and then buy. So there is liquidity here, there is liquidity here, there is liquidity here, there is liquidity here, and there is liquidity below it, right? So there are liquidity on both sides because markets, the retail guys will not just like break out the markets. They will not break out, but instead they'll do like this. They'll take liquidity on this side, and then what? The guys that want to buy would think maybe it's a breakout. They'll now buy. They'll now reverse the market, take the liquidity. That's the stop losses below this level again, and then what? Market will begin to fall. So market liquidity was taken here. And liquidity was taken here. So liquidity was taken on both sides. Are you getting it? So liquidity, when you see these kind of levels in the market, what do? You wait for what? A sweep of liquidity. Are you getting it? Now let's look for examples on the chart. Now, this is a trend line liquidity, right? There is liquidity here, right? This is a buy side what? Buy side liquidity. What am I waiting for? I'm not trading it. I'm just like trying to show you example. I have my own pattern, trading pattern. I don't trade trend lines. Are you getting it? I'll teach you what I trade in our subsequent classes. So, but now I'm just trying to explain to you a trend line liquidity. There are those who are anticipating for market to come to this level and begin to sell, right? And there are those who are waiting for market to break out, bounce, and begin to buy. So there is liquidity here at this top, and there's liquidity here below here, right? Are you getting it? Now, let me show you. All right. Now, this is a what? Equal top liquidity, right? Market will always come what? To sweep liquidity. You can see market came back, sweep this liquidity before bouncing back, right? So this is an equal top what? Liquidity or equal high liquidity. I have more examples for you. Now, this is what equal level or equal top liquidity. This is equal top liquidity, right? Markets always take liquidity or there is liquidity here. Always wait for sweep of liquidity or whatever. Now, this is what a ranging liquidity. Here is what a ranging market liquidity. And then this is what equal low. That's equal bottom, right? Equal low liquidity. And then this is what ranging liquidity. And I think I have more examples for you. Um, or maybe I think that's all. But do you get the concept? Do you understand the logic behind it now? Hassan, do you understand?
Yeah, I understood.
That's good. That's good. That's good. Do you have any question for me?
No, not for this topic.
That's good. Interesting. That's good. I think that's that for today. I only want to teach you about liquidity for today. So our next class will be on today's Wednesday, right? Thursday,
Yeah.
Friday. All right. Our next class will be on Friday. Let's be on Friday. Yeah, should be on Friday. Same time.
Okay.
All right. All right. I'll
Okay.
send I'll send the
Thank you.
video. I'll send the video to you and the link. All right.
Okay.
Have a nice day. Have a nice day.
Thank you.
All right.